So the big question here, Morgan asks in the Facebook group, what are ballpark premium figures for TPD, total and permanent disability, life, and or trauma cover? What's the ballpark? How do we get people to know?
Yeah, it's a bit difficult to answer, but I've got a quote up for myself. So just to give some rough numbers, but the reason why it's difficult is it's based on everyone's occupation, whether you're a male or female, whether you're a smoker or non-smoker, health history, family health history. So there's a lot of things that factor into the cost of cover.
Age,
yeah, how old you are. So I didn't want to give an answer with
and level of cover. How much cover do you want?
Exactly.
So there's like 6 things off the top of the bat.
Yeah, exactly. And so you and me, we may be similar age, we may have similar types of occupations, but it depends on our duties of work. So it's a little bit difficult to answer. Without giving a complete non-answer, I've just done a quote for myself. So if I'm to get life insurance at $1 million, disability insurance at $1 million, and trauma at $150,000, and income protection as well. So I've added that onto the cover, assuming I'm earning $150,000 as well, which would be nice. But so for myself, a rough quote is this total level of cover for myself, and other things to note. I'm a white collar worker, I'm a non-smoker, and I'm, next birthday I'm going to be 39. So for me, the cost of cover from super is $1,730 per year, and the cost of cover out of my bank account is $30 per month. So one thing to note, just in terms of what's structured in and outside of super, we can touch on that in a bit of detail. But overall, the annualised premiums, if you add both of those up together, it's just under $2,400 for the year, not $24,000, $2,400.
I shook.
Yeah.
So for most people, it's actually affordable if you step back and go, okay, what's the net tax cost? Because a lot of that cover in the super fund, you'll get a 15% tax rebate in the super fund.
Yeah.
Any income protection out of superannuation, probably between 90 and 100% will be tax deductible.
Yeah, exactly.
Warren actually asked, what's an appropriate amount of cover per 10K of income? That's not a question you can actually answer, is it?
Again, so the 4 different types of cover. So income protection is fairly easy. So we like to cover 70% of your income with income protection.
And is that the maximum that you can get?
Exactly, because that's the maximum you can get when it comes to income protection. But in terms of the level of cover, the things that we look at depends on your level of debt. So if someone's earning $150,000 and got no household debt, maybe they don't need as much cover for the others amount. So income has a big determining factor on the level of cover that's needed. But yeah, it's not like a X times income is what's needed generally.
And maybe Warren was kind of talking about, because when he said what's an appropriate amount of cover per 10K of income, remember there's that old thing where people go, well, if you earn $100,000 a year, you want 10 times your income for cover, which is $1 million. I think you can actually be a bit more nuanced with that.
Yeah, exactly. And that's similar to the way we think about it. We don't just go X times income, which is, again, depends on 2 households may have $1.5 million worth of debt, another household, no level of debt. The level of life and disability needs is completely different.
Or I might have, I need, quote unquote, 10 times 10, so I need the $1 million of death cover, but I might have $500,000 in my super account, which we could net off that as a need. And I think it's important that we look at the need and work backwards for everyone individually, as opposed to saying blanket, get 10 or 20 times your income, whatever that is.
Yeah, exactly.
The next question is from Padmaker. What are life and income protections, or why are life and income protections so high in Australia, specifically over time, and are they still worth it? We have are they your notes?
Yeah, that's my notes below.
Phil's making notes under the questions. So
I'm doing my homework.
That's right. I was about to read your notes as... Anyway, proceed.
So the first thing to know is we have very generous types of policies in Australia. So like things like income protection that can pay out on mental health conditions is very unique in Australia. So that's the first thing to note. Our policies are very, very generous. In a lot of other countries, they have very basic levels of cover where you've got to be really significantly disabled before you can make a claim, or if it is, it's just a life insurance policy. Things like trauma insurance and income protection are very generous in terms of their policy definitions. So there's that, but we do a little bit of work comparing overseas policies, and the premiums in Australia are relatively affordable compared to some other countries. And some of the reasons for that is we've got compulsory insurance within superannuation. So all super funds have to consider the insurance needs of their members, which means there's big group policies, which does mean there's a lot of insurance policies across Australia. So that does bring down the cost when you've got a big group. So there are things like that where it does actually make the policies in Australia relatively affordable.
Yeah. And I think the question, and are they still worth it? Well, I think if you've got an income, you need to protect it. Now, if you don't need to protect it, does that mean you don't need it? But it can get nuanced. Like if you lived in an area and your home insurance was $17,000 a year, that's a tough pill to swallow, and you're probably going to take a bit of a risk there, or maybe insure half the value or do something. And we just need to, kind of like Warren's question and even Morgan's question, let's look at the need, look at the exact numbers, get a price, then let's have a discussion.
Yeah, exactly.
Rather than, I don't want to do it because it's, no, let's look at the need, get a price, then have a discussion, and then we can tweak.
Yeah, the beautiful thing about insurance is it's not a matter of just keep it as is or just cancel it all. We can dial it back. So we can always say keep everything as is, dial it back halfway or a third of what it used to be, or cancel the whole thing. So that is a great thing about insurance policies. It's not all or nothing.
Hey, it's Glen here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.